and welcome to another Smaulgld live stream. Tonight we're going to be talking about what do Russia's gold purchases and treasury dumps mean for the dollar. Earlier today I released the Central Bank of the Federation of Russia released its its gold holdings for the month of May. They added another 600,000 ounces, or about 18.66 tons of gold to the reserves. That brings their total gold reserves up to about 1,926 tons, putting them in fifth place amongst gold holding nations, right behind France, Italy, Germany, and the United States, and about 100 tons ahead of the People's Bank of China. Now, why is Russia buying a lot of gold? Well, the other thing, we're going to get into that in just a sec. It was also reported by the United States Treasury that Russia sold about $47 billion worth of treasuries in the month of April, U.S. Treasuries. Now, Russia had held about $100 billion worth of U.S. Treasuries for about a year. And that number had stayed relatively steady. It had increased from about $75 billion from late 2016 and increased to about $108 billion in May of 2017. And in April, they sold half of the U.S. Treasuries, leaving them with 48.7 billion in treasuries. Their 1,926 tons of gold are worth about $81 billion. So for the first time, Russia now holds more value in its reserves in gold than it does in U.S. Treasuries. Now, it does have a lot of dollars, but in terms of U.S. Treasuries, they're now worth only about $48 billion, and the gold is worth about $80 billion. Russia has about $470 billion in reserves overall, and about 45% of them are in dollar-denominated assets, including the U.S. Treasuries. But before we get into what all this means, let's find out what happened during the day. So today, gold closed at around $12.67. It was down about another $7 or $8. Silver, which got hit hard on Monday, was basically flat and closed the day around $16.25. Going over to the cryptocurrencies. The cryptocurrencies had a big day yesterday, and that rally was halted, or so they say, as a result of a Korean crypto exchange being hacked and losing about 30 million won, and that supposedly drove the price down. The prices did recover back to almost where they were. Currently, Bitcoin is at $67.50. Bitcoin Cash, or Bcash, is at $8.90. Ethereum at $535, and Litecoin around $98. So we find that whenever there are these hacks on the exchanges, it spooks investors and it makes them feel insecure about the whole platform of trading cryptos. Now, a lot of people move their cryptos off exchange and they haven't experienced those hacks unless they keep them on live wallets on their phone or something like that. But those are the people that put them in paper wallets, store them in vaults, store them in hardware wallets, they seem to be less impacted by the hacks, and they basically just hold on to their cryptocurrencies. I think what happens is when people are on an exchange and they hear about an exchange, they have their cryptocurrencies on an exchange, and they hear about a hack, first thing they realize, you know what? Now I better get my cryptos off the exchange, because maybe they don't have the means or the understanding of how to do it. They say, let me just sell these things before mine get hacked. And I think that's what drives the short-term sentiment, is this mad dash that we don't know how bad this hack is. We better get our coins off the exchange before we get hacked. All right, so let's go into now the topic of the day, which is also today, before we get into the topic, Trump signed an executive order that would prohibit the illegal immigrants and their children from being separated. What's interesting is this issue that's been going on has finally caught fire with the media. It's an outrage, but this has been happening for years. It's a result of the way the law is written. Obama never fixed it, and he in fact said the reason he didn't fix it, he's not the emperor. You can't just fix everything by executive order. But interestingly enough, Trump decided today to fix it by executive order. Now we'll see if that executive order withstands scrutiny. But Congress, this is a congressional issue, not a presidential issue. So we'll see where all that goes. The other thing, Trump is in Duluth, Minnesota right now, giving another one of his, they seem like campaign rallies. I tuned in earlier. I saw him starting to speak, but I didn't really hear him speak because he introduced a congressional candidate from Minnesota. So that's going on now. Don't go over and look at it. Stay here. I'll probably check that out later on the tape, on the recording. All right. Let's look at now Rob Panner before we get started. Was it not the case that many countries changed their strategies after the 2008 crisis when it became obvious that if the U.S. financial system collapsed, that all U.S. Treasury bonds would be worthless? I don't think that people thought that at the time. In 2008, as I recall, oddly enough, the movement when the crisis hit was into the dollar and into treasuries and out of all assets. And really the issue with the dollar started to occur when the Fed launched QE. Because at the time, no country was just bailing out the world with QE. When the Fed decided it was going to buy the mortgage-backed securities, it was going to send untold amounts of money overseas, dollars overseas, and it was going to monetize U.S. treasuries, that's when the real confidence in the dollar and U.S. treasury bonds were hit. That's when China started to get worried. A lot of countries got worried. And that's when gold and silver began to take off. So initially, there was this rush into the dollar. But by 2009, after they launched QE, then you had that period of 2 years where gold and silver just went off to the races. They had done one round of QE. They stopped. There was a bit of a regaining of confidence in the dollar index went up, and then they launched the second one, and gold and silver started to race higher again, and more confidence was lost in the dollar index went down even more, then they stopped for a few months, and then they launched QE3, and most people thought that's it. They can't keep doing this. This is going to be the end of it. And they were very clever. What the Fed did was almost immediately after starting QE3, which was the largest one ever. At times, it was $200 billion a month of money printing. And there was lots of concern that this was going to basically end the dollar because they were printing it into oblivion. But they immediately started talking about tapering. People started to believe them. And while they didn't taper for the longest time, they finally did start to taper in 2015 and finally ended it at the 2014 and finally ended it at the end of 2014. And then all during 2015, they were talking about how they were going to raise rates and they were going to normalize rates. Never happened. They finally raised them once at the end of 2015. However, this is a point that I think a lot of people are still stuck in 2009 to 2014. They talk about dollar collapse, confidence in the dollar is lost, everyone's against the dollar. That clearly was true when the United States was taking the lead during that time period. Also during that time period, if you remember, China went into overdrive. That's when China really decided, the world decided it needed China to pull the world economy out of recession, and they started borrowing money, printing money, using state-owned enterprises to lend money for businesses that were either profitable or unprofitable. As long as they were productive, whether they made a profit didn't matter. Keep in mind, that has not stopped since 2009. China has surpassed all central banks by a factor, I think 3 to 5 over the last 5 years in credit creation. We put that aside and go back to this whole narrative that people keep talking about, end of the dollar, and then the other one is end of the petrodollar. Things have moved on significantly. In fact, they have changed so much that those narratives almost don't make any sense anymore. Let's hit them one by one before we get into this Russia thing, because it is somewhat connected. First of all, with the death of the petrodollar, the idea there would be that Saudi Arabia would basically pull itself away from the United States, pull itself out of the petrodollar agreements, and also say they weren't going to price their oil in dollars anymore. They were going to accept other currencies, and therefore the dollar would not have the same status because all countries had been buying the U.S. dollar and storing it in treasuries because they needed those dollars in order to buy oil. Okay, well, part of that is definitely true. You do need dollars to buy oil, and Saudi Arabia was the largest oil producer, largest exporter. That was more true in convincing the Europeans in 1973, 1974, after the U.S. was off the gold standard, to convince them to continue to hold dollars. They used to hold dollars because under the Bretton Woods Agreement, they could turn them into the United States Treasury and get gold. Once Nixon said you couldn't do that, there was a fear that they would rightfully say, well, what do we need a dollar for? We might as well just pay in lira or pesetas or pounds or francs or Deutschmarks, whatever we had. So they came up with the petrodollar agreements, and they provided Saudi Arabia with protection. And in exchange, all they had to do was price their oil in dollars and only accept dollars for that payment. And that convinced the Europeans, well, not convinced them, but it made them realize they had to have dollars. So it was kind of a stroke of genius, and that became the backing for the dollar instead of gold. The fact that there was demand created because you needed dollars to buy oil. Well, over time, as central banks accumulated dollars, they held far in excess of the amount they needed to buy oil. That was only necessary to back the dollar in the beginning, just to convince people to move over to the dollar. But once the dollar standard, the petrodollar standard, started to latch on, countries started to hold dollars. Now, there was a period of time when inflation hit in the late 70s that the United States actually had to issue Swiss-denominated bonds because people started not to trust the dollar again. And that was because, again, it wasn't backed. And yes, you needed dollars to buy oil, but the United States had a lot of inflation, and it looked like the United States' time was up. And that was the period of time when it looked like the U.S. had seen better days. You had urban decay. These are the Jimmy Carter years, malaise, and so on. In any event, in the 80s, when you had Reagan, raised interest rates, things got better. And ever since then, the dollar has taken on its own life outside of just the need to hold dollars to buy oil. However, the reason I say people are still stuck in the 2008 to 2014 end of the petrodollar is, first of all, as I mentioned, countries hold dollars for reasons other than just to buy oil. They have far in excess of reserves than the amount they need to buy oil. It's because the dollar has become, over 30, 40 years, what all the countries use now to conduct other international trade and to store their wealth or value in their central bank. However, the other thing that people miss about death of the petrodollar is if countries indeed need dollars to buy oil from Saudi Arabia, that was true, and it's still true. It was a big deal. But what's happened since 2014, since the shale boom, the United States has become the world's largest oil producer and soon to become the world's largest oil exporter and is one of the world's largest natural gas exporters. So the idea that the petrodollar is doomed, even if Saudi Arabia were to decide to accept other currencies, that wouldn't doom the dollar. It might doom the petrodollar arrangement because it would no longer exist, but there would still be a need for countries to hold dollars if they needed them to buy oil. And also, they would continue to hold dollars just because of the inertia that they have, that they use dollars as a store of wealth in their central banks. Now, I know that sounds odd, that countries all store each other's debt instruments as a store of wealth, and they count them on their balance sheets as assets because they figure someone owes them money, even though they know they can't pay them. But that's neither here nor there. My point is that the idea that the petrodollar is going away, game changer, game over, it's an outdated thought because the linchpin of the petrodollar is no longer Saudi Arabia because the petrodollar, if you need one, can be backed by U.S. oil instead of Saudi Arabian oil. And there's really no indication that Saudi Arabia is moving away from the United States. They threatened to move away from the United States when the 9/11 suit went forward. Obama vetoed it, and the Congress overrode his veto. And guess what Saudi Arabia said they were going to do if that ever happened? They were going to dump their treasuries. Well, they didn't do that. In fact, they increased their treasuries since the end of 2016 to the current date they've almost increased them by 50%. So Saudi Arabia is, if you take Saudi oil and U.S. oil, now you've got massive amounts of dollars required to buy both. So the idea that the petrodollar is going away, it really doesn't make much sense when people talk about the end of the petrodollar. Martin Armstrong says the dollar will strengthen because Egypt will collapse in the next 2 years. I was going to get to that, Matthew. That's right. Because right now, people keep talking about the yuan is going to be a reserve currency. Again, if you just look at numbers instead of just listening to pumpers, the yuan is less than 2% of international reserves. Why? Countries don't trust the yuan. They keep saying, I don't trust the dollar. Dollar is toilet paper. That's gold pumper talk. That's not the rest of the world saying that. That's what the gold pumpers say the rest of the world says. They're going to boycott the dollar. We're going to get into the BRICS. Everyone says the BRICS are going to crush the dollar. First of all, the BRICS are separate. They're not even the same, even on the same page on a lot of things. In some places, they're against each other. But in any event, the yuan is at less than 2%, and it's actually gone down since 2015 as a reserve currency. The big reserve currencies are, in this order, the US dollar, the euro, then the yen, then the pound, then the Swiss franc, the Australian dollar, Canadian dollar, and the renminbi. So the thing about the euro is it's second. But as Martin Armstrong or anyone would point out, that is a flawed currency, not just because it's held together by fiat, and countries may come in and may come out, but also because right now the ECB has now executed a larger QE than the United States did. So this is my second point about confidence being lost in the dollar. At the end of 2014, the United States stopped its QE. Immediately, the Bank of Japan went into its QE. And then Fisher, who is buddies with Mario Draghi, convinced him that the ECB needed to do QE. Ever since 2015, the United States Fed, the U.S. Fed, has not done QE and has started to raise rates, and since then has raised rates to 1.75%. In contrast, the Bank of England, the ECB, the Bank of Japan, China are printing money, cash, or whatever the currency are, like crazy. So is the Swiss National Bank. The Fed is not doing that. In fact, those countries also have zero or negative interest rates. The U.S. has a 1.75 interest rate now. They have raised rates 7 times. So the idea that confidence is being lost in the dollar, you could say, well, one reason is because they have so much debt. It was true when the United States had, in 2013 and 14, was increasing its debt, printing money, had rates at zero. They clearly were worse off than the rest of the countries. But what they did was the U.S. convinced the rest of the world to do what they had done and to do it even more. So right now, the United States is not the worst offender. In fact, the U.S. is not even arguably moving in the other direction. They're even started to reduce their balance sheet. Now you may say they can't reduce their balance sheet that much. They can't raise interest rates that much. They really can't reduce the debt. That's true. But the other countries are not even making any effort whatsoever. The ECB is not going to raise interest rates until the mid-2019, they said. They're not going to stop QE until at least the end of the year. Bank of Japan still does it. Bank of England still does it. So the idea that the dollar is under this worldwide consternation, it was for sure. But that, and like the petrodollar argument, they're old arguments. The same thing was countries are dumping treasuries. That was true up until about 2015. It stopped, and you kept hearing end of the dollar, end of the petrodollar, game changer, confidence lost in the dollar, countries dumping treasuries. Treasuries in 2017 were snapped up not just by foreign countries, but also by U.S. corporations in large numbers. So there was no dumping of treasuries in 2017. There was a big increase. Now, for the first time in, I don't know how many months, maybe over a year, Russia has actually dumped treasuries. But you would have thought from listening to these people all along that Russia has been dumping treasuries. And this is why I want to get into what exactly Russia has done, what it means, and how many treasuries and how much gold they have, and what it means. But first, I'm going to get to some of the comments so we don't have to go back way at the end, and we can answer your questions now. Hubzilla says, but back then the Fed didn't have much on its balance sheet. That's right, and nor did any country. They all had debt, but they didn't have what they have now. The world is acutely aware of how stretched every country is now. That's correct. It's not a pan-fiat blow-up, more likely now than orderly flight to the dollar. Yes, and countries realize now, and it's a tired cliche that it's the cleanest shirt in a dirty laundry bin, but it somewhat is, because what the U.S. did, these central banks, this nonsense of currency wars, they coordinate this stuff. They know they're all in the fiat conspiracy together. They can't allow the head fiat currency, the dollar, to be doing worse than the other currencies, so they have to debase themselves even more. Swiss National Bank prints up francs and buys U.S. equities. That's no coincidence that they're buying U.S. equities. The European Central Bank prints up euros and buys European bonds, almost running out of bonds to buy. Bank of England, same thing. So they've actually done worse than the United States QE. Now the United States, the Fed could say, see how prudent we are? We don't do QE. We're actually raising rates and shrinking our balance sheet. Matthew's comment, we mentioned that the dollar will strengthen because the EU will collapse in the next 2 years. The other reason the dollar will strengthen, it's a dollar index, and dollar is measured against 58% of the dollar index is the euro. Then you have the Swedish krona, the Swiss franc, the yen, and the British pound. And so if you take those currencies I just mentioned, they've got serious problems. And they're actually heading in the other direction. And so says Harry Dent. All right. Matthew, didn't know that we'll have to listen to Dent. Heard there will be $2 in international trade dollar and a domestic consumer dollar. You can hear whatever you want to hear, and you can listen to Jim Milley tell you it's going to happen. He also told us the dollar dies in 2015. I don't know where they come up with this stuff. They say the voice tells them or somebody told them, and then they insist it's true. Unless I see a document or I hear a official make a statement regarding it. Otherwise, it's just speculation. The problem with speculation is people believe it as if it's fact. Hi, Tom. Good evening, everyone. Hubzilla. The oil production surge is a flash in the pan, according to Steve St. Angelo. Well, he's been saying peak oil for a long time. I disagree with that. The technology for shale oil exists. That Permian Basin is so large, it's not even nearly. Yeah, it may be that certain fields will exhaust themselves, but you got to remember, Saudi Arabia has been pumping for 60 years. They're going to be out of oil before the U.S. is. And the way they have the technology with the shale oil and the sands, they can figure out ways to get more and more oil, and they're not anticipating the United States to run out of oil in the next few years. The Saudis are tools of the U.S. It's interesting, they are and they aren't. That sometimes they go off on their own. Aren't the Saudis pumping more water than oil nowadays, Rod says. I don't know, but that would make sense. I need water. I thought Jim Willey portrayed the idea of $2 system, Scheist-style and world currency. Yeah, he did. And if you stand on your head and listen to Jimi Hendrix backwards, you might hear stuff too. But I don't know where that comes from. It's just Scheist dollar, and he says it, and he yells it, and he's on other channels saying it. And if enough people hear it, they repeat it. Enough people repeat it. It's the old Goebbels thing. Then a lie becomes a truth. I'm not saying it's a lie. I'm saying it's just a fantastical story. Rod Ponard says Draghi is due to step down soon, and it's Germany's turn to provide the head of the ECB. I imagine policy will change. You might think so, but I don't think that Mario Draghi represents Italy. The reason he has a loose policy, because here's what you have to keep in mind with the ECB and the EU. The ECB runs a loose monetary policy, but the EU requires the members to adhere to relatively strict fiscal policies. And for people who don't know the difference, monetary policy is what the central bank conducts, Fiscal policy is the policy of the nation. It's, for example, use Congress. When Congress appropriates money, creates spending bills, that's fiscal policy. What the Fed does is monetary policy. So it's possible that the German who gets in could still be a very loose monetary policy type person. We don't know, but it's a good point. You're right. It's possible that it could change, and it probably will change anyway, because at this point in the cycle, by the time he gets in, Europe should probably be done with their QE. And guess what's going to happen when Europe, Japan, and Bank of England decide they're going to raise rates and end their QE? The United States is going to start theirs again. So basically, they go yin and yang. The United States is now, as part of the tightening cycle, raising interest rates, and lowering the balance sheet, while the others are still at zero and doing QE. Once they start to slow down, and once they finally stop, and if there's some type of recession in 2 or 3 or 4 years, then the U.S. will start its QE. Tom Manley, if we had a 5% rate, we would collapse under our own debt. Yes, that's true. And that's why they're never going to probably get to that high on the interest rates. And that's why, as I say, the others will start raising, and then the U.S. will start lowering them. It's Christmas every day now. That's right. Miser, yep, remember the pumping in 2015. The Saudis are a human trafficking hub. I don't know anything about that. Indeed. Dr. Modesto, Ron Public. The Saudis have massive shale oil resources. They're just running out of cheap oil like everybody else. That's interesting. I didn't know that. And I don't know who may help them with the financing to develop that. That's a very interesting development. Matthew Rose, in 2016, I heard 2 years ago that the stock market will never go down, at least until 2020. Saved me a lot of money from shorting it. Now, Matthew, it's interesting. If you listen to Janet Yellen and you listen to Bernanke before him, the whole concept that they said back in 2009 when they launched QE was they wanted to create a wealth effect. And the way they were going to do it was they were going to try to boost real estate prices and stock equity prices. And they succeeded. They didn't succeed in the beginning. From 2009 to 2011 and 12, you were far better off being in gold and silver because people said this is nuts. But because the Fed kept it up, they kept the money printing going. They kept flooding the markets with liquidity. Finally, around 2013, the real estate market switched on and started to head higher. The stock market had already started moving up. And when you have other central banks, like the Swiss National Bank, and you have sovereign wealth funds buying stocks on the U.S. stock exchanges, and when you have the CME Group offering central bank discounts to buy futures, you know they're doing each other's favors, and they're keeping the stock market prices high. One of the things that Greenspan realized in 1987 when the stock market collapsed, that probably the second most important asset that the United States has is the stock market. And then after that, obviously, the number one thing that they have is the dollar. Now, Peter Schiff says all the time that they'll sacrifice the dollar for the stock market. Nonsense. They will never sacrifice the dollar for the stock market. What they'll do is they will manage to boost the stock market through coordination, but they will never sacrifice the dollar for the stock market. Because if you don't have the dollar, then you really can't even have a stock market. You can't manipulate everything. The most important asset the U.S. has is the ability to keep the dollar and to have it used and have it recognized. And the stock market is the second most important thing. It's very important, and that's why they boost equity prices. Rob, true. Producing energy has cost, I believe it used to take 3 barrels of oil to produce 100. That's right. It costs more and more to produce oil. But there's no shortage of oil right now. The reason oil prices are as expensive as they are right now is because of the cartel. OPEC has decided to have production cuts. And what's throwing a spanner in the works for them is that the United States is still exporting oil. Interesting that yesterday, China said, okay, so we're going to put a tariff on U.S. oil. Now, that's really foolish. You don't put tariffs on things that you need and you can't produce yourself and probably can't get elsewhere at a lower cost. So that actually, I think, shows a weakness in China, because one of the things that, again, people don't realize, they think China's in the driver's seat. China brought in 300 million people from the backwoods of China, put them in the cities with the understanding that they would have work, they would be busy, and they'd have a lifestyle. Well, that lifestyle is based on borrowing so much money, creating so many projects, and also subsidizing their exports so they can continue to produce 7-8% growth. They can't get out of it. They have to continue, and that's why tariffs would hurt China far more than they will the United States, because they've got baked into their communist centrally planned model that they're going to get a certain amount of revenue from exports. If they don't get that revenue, they're hosed. That's why they're also doing, we'll get to this in a second, the Belt and Road. They need to export their money printing Ponzi scheme and do make work projects overseas, because they built enough ghost cities in their own country. They built enough bridges to nowhere and so on. Tariffs on China is a big mistake. They make the crap we buy. Yes, but Tom, the tariffs are not on the finished products. See, what they're doing is they're putting tariffs on things like steel. They're putting tariffs on technology that's coming back, which many say is stolen. Yes, if they were to tax refrigerators, they were to tax toasters, all the white goods, all the general goods, then you would see price inflation in the United States in a big way, because we don't make that stuff in the United States. People say the United States doesn't make anything. The United States is the second largest manufacturer in the world behind China. The United States just happens to make larger ticket items like aircraft, tanks. They make a lot of the chips manufactured in the United States. They don't make, the U.S. does not make any more gadgets and mid-level priced items. Rod, absolutely, I'm not a doomer, but you don't add 3 billion people to the planet's middle class and not have a natural resource shortage on a lot of commodities. That is definitely true. It's also true if you think about it. What about all the Indians and Chinese and the wealth that has gone into those countries in the last 20 years? And both of those countries have a penchant for the yellow metal, and not that they love silver, but if it's cheap and you're middle class and you have a little money, you're gonna buy a few silver necklaces. They don't cost much. So what I don't understand is there's more demand in those countries for gold and silver. What they've done is they've offset that demand by weaning Westerners off of it and pushing them into, if they want it for investment, into paper products. And they've actually also, I think there was a point in 2015 and early 16 when the U.S. Silver demand especially was starting to get to 6, 7, 8% of overall annual mining supply, when the U.S. was selling 47 million American Silver Eagles and was threatening to sell 50, 60 million in 2016 before things fell off the table and have not since recovered, and Canada sold 40 million. There was a point where investment demand in silver was almost 25% of overall demand, and that was up from just 5% in 2005. So, yes, commodities, they're scarcer. We don't really grow more of them. Other than food, you can increase food production, but other commodities you really can't increase, and you have additional people who need water is a big problem. That one I think is going to be a big issue. I haven't thought that one through. Lewis, do you personally accumulate precious metals? If so, why? No, I don't. I don't accumulate. I don't really have much disposable cash to accumulate. I did make a few purchases way back, but I have not been adding hand over fist, anything like that. However, I do think, and this is not investment advice, it is a good idea to have precious metals in the portfolio as an insurance policy. They don't pay dividends. They don't pay. They don't produce anything, and I don't expect them to skyrocket. I think that's pumper. Anyone who tries to sell it to you because it's going to skyrocket, they're selling you something that doesn't make any sense. The only reason that gold would skyrocket is if the world collapsed. So you don't have it for that reason. You have it for the reason that if there's inflation or if there is a distrust in the monetary system, then definitely gold is insurance against that. And I don't like to quote Jim Rickards. I'm not a fan of his, but he's right that if he does a quick calculation. He says if you have a certain percentage of your wealth in gold and a certain percentage in stocks, and the stocks go down and the gold goes up, you've basically insured the drop in your portfolio. All right, let me get some more questions before. I haven't even gotten to the Russian thing yet. Where are we? If our corporations make products in China, they are going to get. Yes, the thing about tariffs, someone gets. There's not. It's not as. Some people get hurt. Some people are helped. The difference in the situation in the tariffs with the U.S. are if you have countries who, let's say, to make it very simple, there's 3 countries that charge the U.S. 25% for the U.S. to send their goods into their countries, and the U.S. only charges 5%. By the U.S. taking their tariffs on the goods up to 25%, all they're doing is equalizing things and probably ensuring that the 25% tariff on U.S. goods comes down to 10, and then the U.S. will bring it down to 10. So it's probably a win-win situation eventually for everyone, or at least a win for the United States. I think he's right when he says you can't lose trade wars when you are when you're at a disadvantage. Tariffs in themselves are bad because they create losers, they create artificial winners, they create losers, and they hinder trade. But when the trade is already hindered by a disproportionate tariff on U.S. goods, then using tariffs as a negotiation is not the same thing as a trade war. Matthew, is North Korea a publicity stunt? Who knows? I can't seriously think North Korea had an intention to start a war with Trump. Now Trump is talking about Space Force. You never know with these people. I can't even comment. Lewis, do you personally accumulate? I answered that question on basis. Yes, I bought and stored in I think it was a Swiss and then gold money a long time ago. And I think that I have what I consider the proper amount in the storage, that it doesn't make sense to just keep piling on and stacking like there's no tomorrow. I'm not sure that makes sense. And as I mentioned, I personal circumstances don't allow me to be investing hand over fist in anything. I purchased a house, so that's basically where, with other payments, I'm not looking to add tons of silver and gold every month. But if I were, let's say I were someone who had a lot of cash lying around and it needed a place to go, I definitely would not put it all in gold or silver. I don't think that that's prudent. I wouldn't put it all in any one thing. I would go with the old diversification. And I would also, my mentality on gold is that gold is a far more stable asset than silver. It's obvious that it is. It doesn't have the same volatility as silver. Silver is speculative. Gold is more of insurance. Miners are even more speculative. So, let's see. How big an effect and will the Mexico and Canadian tariff loopholes have? Do you think Trump and China will actually carry out their tariff threats, or is this the usual? No, Trump. One thing about Trump is he doesn't seem to care. If he says he's going to do something, he doesn't. He lets the chips fall where they may. And I think that's because he's used to business, calling bluffs, negotiating deals, and he already knows what the scenarios are. And he says he's willing to walk away. He understands what the consequences of whatever his actions might be. NK is in the CIA operation, more world theater. You never know with that stuff. You never know. It feels like gold and silver are going nowhere for a while. Well, that's true. That's definitely true. So why the name Smaulgld? What's your mission? My mission, a lot of people think that because you have a gold or silver channel, your job is to pump it. Your job is to go on there and say, gold and silver set to launch, sent to skyrocket, game over, game changer, Russia doing this. And you know what? That's nonsense. The reason I got into it was because I was listening to this stuff and it all sounded logical, why gold was set. And then when it never did, I started to do my own research. So now I report on the numbers, as many different numbers as I can, to find out what's going on. And we're going to get to exactly what the purpose of today's is. What do Russia's gold purchases and treasury dumps mean for the dollar? I'll give away the conclusion, basically nothing. But you see, if you listen to the pumpers, Russia's buying gold hand over fist. They know what's coming. Gold set to skyrocket. No, you take these items in isolation, and that's why I started the channel. That's why I 2013, I saw something wasn't happening. It all made sense. The gold was just going to continue to go higher, and it stopped. And I wanted to know why. And what people, they get very offended. They want to hear a pump story. They want to hear cheerleading. It gets to the point where someone says, "Oh, I sold my silver," and like, he's a traitor. What? This is not some type of club where you have to be loyal to silver or loyal to gold. So I don't have a mission other than to understand and to spread the understanding that I have about these markets. And I've seen the markets, and that's why I don't make these ridiculous predictions. I would think by now people should be tired of the types of predictions that are being named. Commitment of traders never happened before. They make, the sovereign size gold buy, gold back yuan, all these stories, and then people believe them. COMEX default, you'll see. And when it doesn't happen, they still believe these people. And they listen to the next pump story and the next one. And when they run out of pump stories, they go back to the ones that they had 2 or 3 years ago about COMEX default. And then it's game over and silver set to skyrocket. Ball under the water for so long, it's unsustainable. No, maybe it is sustainable. Anyway, that's why I don't have a mission. I'm not here to bash. I'm not here to promote. I'm here to try to point out what I see in these markets. What I see in the markets makes sense to me. There's manipulation for sure. But think about it. Why do all these pumpers tell you that gold and silver are set to skyrocket, and in the same breath will tell you that gold and silver are manipulated? Well, if they're manipulated, how do you expect them to skyrocket in face of the manipulation? Makes no sense. Why do they say they're going to skyrocket? Because they've got a subscription letter to sell you. They've got the precious metals to sell you. I don't really sell anything. I take donations, and I get precious few of those as well. If I came on every night and started promoting, and you see it, people who pump cryptos, people who pump gold, people who pump silver, they get donations, they get patrons, they sell a lot of stuff, they get people to sign up for the newsletter, they charge hundreds of dollars a year to be told nonsense that they want to believe. All right. PMs for only generational transfer of wealth preservation. So what does Lewis invest in? I just told you I had a house. And by the way, this isn't an investment channel. See, that's the other thing. People they listen to YouTubers to get rich, to get some type of insight that's going to help them out, that's going to make them money. I'm not here to make you money. That's what people know that. I'm not here to tell you what you should do with your money. What I do with my money, it's irrelevant what I do with my money. I'm not predicting anything. I'm not advising you to do anything. I don't care what you do with your money. I don't care if you want to listen to pumpers, buy gold, or you want to buy silver, or you want to buy real estate, or you want to buy stocks, you want to buy bonds, you want to buy this. I don't care what you do. That's not what the channel is about. The channel is about giving information about the gold and silver market and to a certain extent the crypto market. It's not about the pump either of them. Matthew R. Look at silver and gold price in 1982 to 2000, 2 decades if you did next to nothing. Yep, but be eaten away by inflation. That is definitely true. Let's see. I put all my savings in silver. Well, good for you. Wonderful. That's been the worst performing investment for the last 7 years, by far. You could have put your money in the S&P, the Dow, some stupid bond fund, real estate, anything, gold. So, only thing probably worse than silver has been platinum. That's it. HCL, yes, I finally realized you aren't going to get rich in PMs. You're not supposed to get rich in PMs. That's a pump story. You're supposed to preserve your wealth in PMs. You're not supposed to. You want to get rich. You speculate. You buy stuff that it's like pie in the sky or it's a potential growth story. Gold doesn't grow. It's a lump. That's it. The attraction of gold is that it doesn't do anything. It's not supposed to do anything. It doesn't default. It's the safety of it. You can't have a speculative asset that's safe. Gold is safe, supposedly, because it's rare and it's inert. It's not going to do anything. It's not going to change. It's not going to create anything. So you can't expect it to skyrocket. Silver's underpriced compared to gold. Yeah, that's another nonsense story, too. What does that even mean? If people don't want it, then the ratio is gonna go higher, and that's what it has done. The ratio has gone higher and higher the last 10 years. The ratio has rarely been anywhere near 16 to 1. Relative rarity is not determinative price. A quick example I use is I've done 3 drawings, Picasso's done thousands, therefore my art's supposed to be more expensive than his because my art is rarer than Picasso's. That's nonsense. There's a reason why silver is cheap. Silver's pocket change. Not against silver. Silver's I think it is a good price. But the idea that the pumpers tell you, unsustainable, the gold-silver ratio, there's some natural level that it has to end up at is complete nonsense. It hasn't even been there in 100 years. It hasn't been anywhere close to that. And even when the gold price was fixed at $35 an ounce, from 1934 to 1975, it's still the gold-silver ratio never got to 16 to 1. It got to 15.91 for like 10 minutes in 1980 when the Hunts brothers were trying to corner the market. So look at the gold-silver ratio. It means nothing to me. Yeah, silver is money, not so much an investment. Silver isn't money. Silver is an asset. Money requires it to be used in commerce as a medium of exchange, not as a potential medium of exchange. People don't use silver as a currency. It's not a medium of exchange. Could be. You can have a silver quarter, you can have a silver dime, but it is not money. People say that gold is money, period. Silver, no, it's not. It's a metal, it's an asset, but it is not money. It meets the requirements for potential money. It has long since been money, not been money. It's been demonetized. That's why they say it's been demonetized. Silver hasn't been money since 1965. Gold really hasn't been money since 1934, but it was money for the central banks until 1971. You could argue, because gold is held as a reserve asset, that it's still money, but it's not a medium of exchange. It's more of a wealth-preserving asset for the central banks. No one trades goods and services in gold or silver. Fiat currency, you hear this stuff and they just repeat it. Fiat currency mathematically fails, becomes zero, so why keep it? Because during your lifetime, you may need fiat currency to buy stuff. If the average lifespan of a fiat currency is 42 years, whatever they try to tell you, well, during that time period, you need to eat, live, breathe. You need to do stuff. If you stack silver, you can't use it to buy anything. So you do need whatever the fiat currency is during that time. The world lives, unfortunately, this isn't my decision, but it's reality. The world lives on digital fiat currency. It doesn't live in a silver fantasy. It doesn't live in a gold fantasy. That may be wrong to you. I may not like it either, but that's the way it is. You want to buy a house, you want to buy food, you want to do anything, you want to go to the movies, your silver doesn't do you any good. I remember those years, says Matthew Rhodes, but I look at gold and silver as an alternative to the banks, which I do not. That's right. It is a very good alternative, and basically you're saying it's not to be spent. If you're going to hoard gold and silver and not use it, then it's not money. You're just hoarding it. You're holding it as an asset, as protection. Your insurance policy isn't money. When you have an insurance policy, you don't spend it. You cash it in. And I think that's what gold and silver. Banks are criminal. The Fed Reserve, off by Rothschilds. Okay, treat us like cattle. So don't. Okay, so you're going to make a difference. You're going to make it. You're not going to use the banks. You're not going to use it. You're going to live in a silver world. And you know what? I would love to join that if it was more than 20 people and you can actually sustain yourself on that. You can't. So the idea that somehow you're battling the Rothschild by buying a roll of Silver Eagles is fantasy. Silver is gold's little brother. That is true. Always has been. And that's why when gold really starts to take off, that's the only time you're going to see silver take off. Gold has to have a sustained rally, and then silver, historically, always happens. Catches up, passes it, and then does a flame out. Look at the charts over the last 300 or 400 years. Silver never sustains a high. It'll spike up, and then it'll come crashing down soon then after. Gold is savings. That's right. I agree with that too. Manipulation will end soon. That's another thing. Why? Why will it end soon? What is it that's going to make it end? Who's interested in making it end? There's no reason for it to end. If they make it work and they convince people, if you think about it, it's going in the other direction. Physical gold sales are way down and gold ETF sales are way up. What does that tell you? People have adapted to the digital world, the paper world. They like that. It may be stupid of them. I'm not saying it's the smart thing to do, but people prefer the convenience of gold ETFs if they have to invest in gold. That's how they look at it. The U.S. Mint sells nothing now. The last 9-10 months, they've sold absolutely nothing. Get rich, work hard, and save. Rob Gibbs. Put your money in Air Jordans or vanilla. Yeah, they're worth more than an ounce of silver. Okay, Silver says, I now have a 1960 government coin, 50 cent. The same coin is now worth $10 only because of this. That's right. And that proves to a certain extent that silver holds its value. I'm not saying it doesn't. That doesn't mean it's going to skyrocket either. I mean, I think right now, you can almost get a gallon of gas for about a quarter and a silver dime. A silver quarter and a silver dime. That's about what gasoline cost in 1963, 1964, about 30 cents. That's not skyrocketing anything. That's just holding on to value. Inflation. So yes, I know all about inflation. Where do people get the laughable idea that Russia is an economic superpower? Well, we haven't. I'm sorry, it's 50 minutes in, and I have not gotten to the topic. What do Russia's gold purchases and treasuries mean for the dollar? I was going to cover that. We're going to have to bring this one back tomorrow because I want to keep this under an hour. So I'm just going to start straight in tomorrow on what the Russia's gold purchases and treasury dumps mean for the dollar. We're going to hit on that, Dr. Modesto Esquire, about Russia, on how large they are, how important they are in the world economy. Russia's biggest importance is its military, not its economics. It's the Wyoming of Eurasia. Small, it's easy to say that you should have done this or tell us what. No, again, I don't tell you what to do. Again, if you're looking for channels, go to the pumpers. You'll lose all your money. They'll tell you exactly what to do. Buy this, buy that. I've never said to buy anything. I'm not going to tell you to buy anything. All I'm giving you is facts about silver, facts about gold, and analysis about gold, silver, as it relates to supply and demand, and all the manipulation and all the countries buy, and all the countries are doing, and I tie it into a economic analysis of what's going on in the world, what central banks are doing, what people are doing culturally around the world. All I'm trying to do is make sense of it. I'm not trying to provide recommendations, and I'm not trying to tell you what you should have done, what you should do now, what you should do in the future. If you want that, go to one of the pumper channels. They'll tell you to buy silver. You can nod your head, and after you bought it and you don't make any money, they'll tell you another story why you should keep buying it. And that's what's probably happened to a lot of people. They got hoodwinked in the beginning. They bought it. They repeat the mantra. They keep being told the same story. It's unsustainable. It's unsustainable. At some point this, some point that. Then they invent new stories, gold-backed yuan, sovereign-sized gold buy in 45 days. This is a game changer, shock the world. And you believe it because now you want to believe. You have to believe it. You're not going to give up now. And I don't do that. I've been analyzing since 2013, looking at it as if I didn't have any and I didn't care. And I was trying to understand it objectively. Most people want to hear what they want to hear. That's why they're attracted to stations and channels that tell them nonsense. Silver is rarer than gold. Silver is set to skyrocket. If you want to hear that every night, there's plenty of channels that you can go listen to that. Easy to say. India replaced their whole currency base. Argentina is having another currency crisis. Venezuela is suffering hyperinflation. What's going on here? Currency is different to money. Mike Maloney. Okay, so currency goes to zero. Money keeps its value. Yeah, when? What does that even mean? Are you richer now? I don't want to be Ronald Reagan, but if you've held silver for 5 years, do you think you're richer now than if you had put it in the stock market, or if you had bought real estate, or if you bought bonds, or any other asset? But you get to say silver is money. Silver is keeping its value. What value? If you can't buy more stuff today than you could 5 years ago with the amount of fiat that you put in silver, you lost value. I don't want to say you lost money, but no, because you still have money. You have silver. Use silver. You can easily trade in and out of silver. Come on. Hey, you can lose money every time you trade it. Big commission fees on the trading of silver. You pay $2 over spot for silver eagles. Silver is meant to be held, not to be traded in and out. Now, you're right. If you want to trade in and out of the silver price, and people do this. There's lots of silver supposedly in the silver ETFs. And people love that kind of stuff. If you need it, then trade it for whatever criminal, okay, Rothschilds, criminal gang. You only use bank when you need to. Don't keep all your savings in the bank or in some digits, LOL. You know what? If the digits buy you stuff or get you services, I don't have a problem with that. If that's what is valued, not the way I would value it, but the way, if the rest of the world thinks that pumpkin pie is worth $10,000 and I can buy it for $500, I'm going to buy them and store them. I may not think they're worth $500. If they're going to pay $10,000 for them, then you're foolish. If everyone's going to value pumpkin pie at $10,000 a pie, I'm not buying silver. I'm buying pumpkin pies if I can buy it for cheaper. Yes, Matt is another one. Unsustainable. Mathematically, you can't keep printing trillions and have the currency keep value. Yeah, mathematically, you're not going to live another 80 years. So what does this even mean? Mathematically. During a period of time, you have to make a calculation. During your lifetime, how can you maximize the time you have and the value of your assets? And if you think silver is set to skyrocket, and you could be like the great waiting for the great pumpkin, and you could sit there and say, next year, this is it, this is it, this is it, and your whole life can pass by. You could be saying it's unsustainable, and one day you'll be right, and one day you'll be dead. Municipal and state governments are supposed to collapse in the next few years. Pension liabilities and everyone will race into treasuries, I think you're going to say. Unfortunately, that's probably true. That, you see now, the municipal and state governments, that is definitely true, man. They are a mess. All that, they're classic kicking the can down the road without the ability to even print their way out of it. They can't even tax their way out of it. People would just leave. So that is going to be a problem. But I don't know if that's going to mean a rush to gold or silver. I've been contemplating that. I hate to say it, but there are people that would rush into cryptocurrencies. You think about the people under 40, they don't even know what gold or silver is. Russia's economy has shrunk dramatically, but their debt to GDP ratio is excellent. That is true, Rod. People throw Russia into the same boat as China. It is such apples and oranges. Russia has very little debt. Russia has a solid economy, even though it's relatively, it's not a complex economy. It's mostly based on oil. It has recently some agricultural exports. It has a decent, very well-run central bank. It's got $500 billion in reserves. So yeah, interestingly enough, the ruble is garbage. Which I'm surprised because it's a currency that is really backed by gold and oil, and it doesn't get the respect no one holds rubles. No one wants rubles. More people hold yuan. I think that the Russian economy is on much more sound footing than China's. Currency goes down, cost of mass printing. Okay. Silver keeps value. No, silver loses value, or has lost value the last 7 years. You can keep saying it holds value. It doesn't. Gold has held value the last 5 years. Do you realize silver has gone down against gold the last 5 years? 40%. That's how much silver doesn't hold value. Or, I'm sorry, hasn't held value. People like Aaron Scott coming along has reinforced my thought that there's going to be women in the U.S. that start getting gold and silver like crazy. It could be. Salivate Metal and I and Silver Fortune have talked about this. Our audiences are, mine is 100% guys, supposedly, according to Google. And theirs are in the upper 90s. Wages versus silver. Wages lost its value against silver since 1964. Pretty much. That's pretty much true. But they've also lost their value against other things, too. Mike Maloney drives an $80,000 Tesla. You can buy a lot of silver. Oh, let me see here. You can buy a lot of silver at $80,000, and the price is going to skyrocket any day now. You would think he put off the purchase for a few months. Seriously, ladies live longer, are smarter, and talk all the time. Text, you name it. They are social, ambitious creatures, and they talk drivers of the PM community. Shock and awe. This changing men don't talk that way. Let's see. Been stacking silver since 1971. Yes, worth every copper. Well, actually, Tom, you're right. If you hold gold or silver over a generation, more than a generation, should be okay. I mean, it's definitely better than if you put that money in cash in your mattress. If you put it in a secure vault overseas and just leave it there, yeah, you've done well. But when you're looking at periods of time where you need to spend money, or you need to dip into your savings because of a life event, like you get married, or you have kids, or you buy a house, you don't have the luxury of storing, unless you have a lot of money, of storing your wealth for 30, 40, 50 years. Now, you could argue, yes, if you are 25 years old and you have a lot of money and you want to take $100,000 and ship it off and wrap it up in a bow and put silver in a vault or gold in a vault, that might not be a bad idea. But to insist, but that's not what they tell you to do. The pumpers tell you the reason to buy it is buy it now because it's set to skyrocket. If you don't buy it now, you're going to be out. You won't be able to find it. It's game over. The game has changed and it sold 50,000. That's a load of garbage. That's just the sales pitch. It's dressed up with a bunch of facts, Deutsche Bank, derivatives, whatever you want to say. That hasn't happened. And the thing is, they make the prediction and have been making the same predictions for years. That's different than saying, buy it now, put it away, you'll be happy 40 years from now. That's not what they're saying. They're saying buy it now because it's set to skyrocket. The 19, let's see, we've got to get heavy. Stock pumpers tell you to buy and it's record. Yeah, I'm against all pumpers. I don't know if you noticed that, Silver Slave. I don't like stock pumpers. I don't like gold pumpers. I don't like silver pumpers. Certainly don't like crypto pumpers. And you do have a point. Silver pumpers are telling you right now to buy when it's low, but they've been telling you to buy all the way down since 50. The bottom is in, it's $40. The bottom is in, it's $30. The bottom is in, last chance, $30. The bottom is in, last chance, it'll never go under $20. The bottom is in, 17. So they have no more credibility, like somehow they're doing you a favor by telling you to buy now. They've been telling you to buy all along. They'll be telling you to buy on the way up, on the way down. They're always going to tell you to buy because they don't make any money unless you are buying silver. And they're not going to sell any subscriptions unless they're promising you that the price is going to go higher. Pretty obvious to me. All right. Sorry for having gone off on that, but we have not finished our topic. Join me again tomorrow. I want to thank everybody for staying with us. But join us tomorrow. Join me or us or the whole crowd out there tomorrow at the same time. And we will get to directly what do Russia's gold purchases and Treasury dumps mean for the dollar. Thank you very much. Thanks, Tom. So what no one actually knows when we'll stop driving the price down using trillions of paper contracts to control price. I'll leave you with this question, Silver Slave. Will they ever run out of trillions of paper contracts? Does it cost them anything to create those paper contracts? Have a good night.